And I think Uber is one of the most fascinating companies to talk about because there have been few companies that have changed the world as much in the past decade as a company like Uber. But that doesn't necessarily always mean that they're a great investment because some of them aren't making enough money or they aren't making any money. Uber is certainly one of the ones that falls into that camp, at least right now, Evelyn.
Hi, guys. And I love how whenever Kevin mentions that a company becomes a verb, Uber is right on the top of that list. Just like you use Google synonymously with searching for pretty much anything on the internet, people oftentimes use Uber when they mean they're taking any rideshare company in general. At least I know I do, as well as many of my peers. But the pandemic has undoubtedly hurt rideshare companies like Uber and Lyft. But another huge hurdle facing both of these companies are local government regulations. And in fact, just this week, we've seen a number of headlines regarding that. On Monday, Uber was granted an 18-month license to continue operations in London after a judge overturned a ban placed on Uber by Transport for London last year. And the judge said he found Uber fit and proper to hold an operator's license there. This tweet mentions that this user is excited about the return to London. However, if you search on Twitter yourself, you'll see that many people are not excited for that. However, also on Tuesday, Seattle approved a minimum pay standard that would require Uber and Lyft to pay their employees and drivers a minimum pace or a minimum hourly wage. And a similar legislation is being hotly debated in California right now, where Uber and Lyft would be required to classify their drivers as employees rather than independent contractors. And all three of these things are heavily weighing on Uber and Lyft, especially with Seattle and the approved legislation in California that would, boost their expenses, and that would likely turn on the customer, as well as we'd be seeing higher costs for rides. But like I mentioned, the pandemic has been hurting these rideshare companies, but this is sort of where Uber has taken it more in stride than its competitor Lyft. This next tweet that I have for you guys says that amazing how Uber, DoorDash, and Instacart are so much more aggressive in moving into other categories than Lyft, which seems asleep at the wheel. So shares of Uber are up about 14% year to date, whereas Lyft shares have fallen 36% year to date. And I think a lot of this comes as, people aren't using rideshare apps quite so much because we're just not leaving the house nearly as much as we were. I'm not Ubering twice a day to and from work that are 5 days a week. And I think a lot of that is being shown here in Lyft's stock price. But Uber isn't just a rideshare company. They have their reach far outside of rideshare, as well as Uber Eats. And this next tweet is just one of many that I saw on Twitter today about how often people are ordering Uber Eats. Kylie Wallace here on Twitter says, "Stage of pandemic I've reached, considering using Uber Eats to order a donut." The food delivery service that Uber offers is hugely popular, and as people are leaving their homes less, while rideshare is hurting, their Uber Eats segment is thriving, and that's something that Lyft just does not have, and that is definitely making them a winner in the rideshare space right now. Guys.
Kevin, I got a question for you real quick here.
Sure.
When you look at all of this, we've talked a lot about things being on the offense and on the defense throughout this entire pandemic. And I think Evelyn's point here that the tweet brings up on whether or not Lyft is asleep at the wheel, is that maybe also highlighting, is Lyft just playing defense because they didn't have these type of things set up prior? And Uber, since it had Uber Eats, has been able to continue to push the envelope forward and take advantage of what little offense they've been able to play.
Right. Alex, both these stocks are in the human being delivery business, right? There's one difference. Uber will also deliver food. And soon, I believe, Uber will deliver to you just about anything you want delivered, right? Lyft has really pigeonholed what they do to people. And that hasn't worked in this pandemic. And So I think offense and defense is a good analogy to make about these two companies, because that's why one is still up on the year and rallying, and the other one is down on the year and struggling. So I think the international look of Uber helps them. I think the everything else that they deliver besides human beings helps them. And so, yeah, I think you're exactly right, Alex. It's offense and defense, and Uber has stayed aggressive during these times, guys.
Evelyn, last thing here before we let you go, I got a quick question for you. You talked about in your kind of peer circle, and of course, that's just anecdotal evidence, but Uber's the verb. And I think that's the same in my circles as well. And I think depending on who you ask, some would say that they're loyal to one brand or another, particularly because of rewards or because the integration of Uber Eats. I tend to be someone who typically uses Uber unless there's some type of circumstance that would force me to use Lyft, whether it's a wait time or a price. Do you find yourself using one exclusively, or are you someone who tends to bounce back and forth based off pricing?
I actually have a great example that happened last night. I was initially going to check Uber to go watch the debate at my friend's house, but Lyft was offering a half off discount promo code that, of course, I couldn't not use. So instead of my ride being $12 on Uber, it was $6 on Lyft. And I think that above loyalty, the price differences is really what matters there for these companies.
Yes, certainly to some extent. I mean, we see that with other things like airlines as well. And so obviously something Amazon's brought into the forefront in terms of being able to do things cheaper, faster, and of course, more efficiently in ways. So I think it's a great point, and I think it's an interesting place to transition this conversation as we say goodbye to Evelyn Baker, TD Ameritrade Network contributor. We want to welcome in Landon Swan, the co-founder of LikeFolio.com. Landon, pick this up where you want. Obviously, Uber has been fortunate to have generic, or actually, I guess, food delivery as a potential choice for its customers, as well as just ride sharing. But is it more than that? Is there consumer loyalty in here that you can tell, or is it, to Evelyn's point, this is a price war, and hey, it's going to get even more ugly if some of these expenses continue to rise as well.
Yeah, I think that right now, ride shares are basically a commodity. Before, if you go back 3 or 4 years, I think there was some loyalty towards Lyft because they offered the ability to tip, and I think the drivers were aware of that and they tried a little harder. But once Uber matched that, and now it doesn't really matter who you go with, you're going to get basically the same experience. I think it's a commodity, and you're just going to go with whichever one's more convenient. Now, obviously, Uber's got a lot more things that they do than just ride sharing, which is huge. But overall, the company is very, they're struggling right now. They're down quite a bit when you're talking about purchase intent. People using Uber overall is down significantly, even just rideshare or in the food delivery space. And so when you look at the entire company, people talking about using Uber, you can see that on a year-over-year basis, they're down about 42%. Again, this is the entire company. This is all the different ways that you can use Uber. And they're bouncing back. They're almost back to where they were stock price wise before the pandemic. I think they got basically cut in half in that March sell off, and now they've gotten almost back to where they were. I think they're maybe 10% lower than their February highs. So they're doing better than Lyft for sure. But when you look at, food delivery, which is the thing that I think a lot of people were hoping would save them, because if you're locked down, you're not going anywhere, you're not using Ubers to get places, then you're staying home and getting food delivered. But when we look at Uber Eats, it's actually down 20% year over year. So there was a huge spike, obviously, right when people were quarantined. But we're seeing data that's basically saying that the overall behavior has not been changed. So as things are starting to open up a little bit more, maybe people are cooking more at home. We're seeing that it's actually hurt this overall food delivery overall. And that is actually true when you look at food delivery just in a more generic sense. It's not down 20%, but it's basically flat year over year. Obviously, again, huge spike when the quarantine hit. I think we're up about 6% year over year. So very little change in behavior. I think a lot of people were introduced to it. There maybe have been some problems with delivery times, things like that, and it just hasn't changed the behavior. So we're a little bit concerned with that. I know that Uber's got a lot of arms, and people were hoping that the food delivery would sustain them through all this, but we don't see that happening here at LikeFolio. I will say though that there's other companies that are doing better and worse. So look at Grubhub, we've got them down 30% year over year, but DoorDash, we've got them up 18% year over year. So I think this is a little bit of winners and losers market. And then if you look at rideshare, what's interesting is we've got Uber down 42% year over year. And again, that sort of correlates with their revenue being basically cut in half during the quarantine. Lyft, though, down almost 70% on a year over year basis on purchase intent. And that, again, correlates with their revenue being cut about 70% as well. So Uber's doing better because they have diversified, but food delivery is not the savior. I think that really Uber needs to get things opening back up. And I know that there's a lot of politics in these names, especially when you talk about California and all that's happening out there. But this really could be one to watch, because I think that there's a perception that Trump wants to open things up a little bit more and Biden wants to keep things closed or close them down more. Uber investors absolutely need for things to open back up. So if you're a smart investor and holder in Uber, you're going to be watching this election. It's very important.
Landon, let's pivot slightly, because your data says that there's been some bumps now that there's it's down into a trough here, which is expected during this pandemic. But here's the thing: if you look on the chart on the Thinkorswim platform of Uber, and in the quarter leading up to the beginning of the pandemic, I believe they released earnings right on the 6th of February, right early. They still didn't make money. This company, when I look at my Thinkorswim platform across the bottom of the chart that shows the earnings, I see negatives across the board. Now, it's even worse now, as you would think it is, but this is a company that still has to figure out a way to become profitable, not just make revenue, but become profitable. Landon, let's put on our think caps here. And is there any way that this company becomes profitable without the obvious of raising prices, overall prices more, and paying their drivers less? Guys?
Yeah, you got to pay your drivers zero. They've got to have automated cars. I think that's the winner for them 5 years from now. If you've got that, then that's it. I mean, and I think that's what they're setting up for, right? They're building out the infrastructure to become the dominant player so they can deliver everything from people to food to packages. And if they don't have to pay someone and it becomes an automated car 5 or 10 years from now, then they are going to absolutely crush it. And I think that's the only really justification for the valuation that they're at right now. And I think it's a valid one. If that was not a possibility, then their valuation is ridiculous and everyone should be shorting them. But that is a possibility. So long term, I think it really makes sense.
Yeah, Lane, I think it's an incredible point that I'm going to expand on in a second here with Kevin. But if I could sum up how you're looking at Uber in the near term, it sounds like this is an economic story. Hey, reopening, a surging economy, that's a clear positive for Uber. Restrictions, closing down, contracting economy. Hey, the evidence is pretty clear that's not going to be good for a company that relies on discretionary spending to get food delivered and to go places. So more of a convenience spend for so many. Is that kind of how you see it?
Yeah, I would absolutely agree with that. I would also add in that California is about 12% of the U.S. population. And if you have problems out there where you can't have drivers because of laws, things like that, then nobody wants a 12% revenue cut, and it's just extremely disruptive. So there's a lot of politics that go into Uber, but it really comes down to back to normal. They have to get back to normal. American life has to get back to normal in order for Uber and Lyft and companies like that to really do well. So, obviously we all want that to happen. Hopefully it's sooner rather than later. And if you're an Uber investor, definitely for sure.